Look at this thing. Look at this thing. Are you kidding me? This is an insurance policy. This is what they're giving somebody who doesn't know the first thing about reading a contract or about insurance or about anything. This is what the insurance company gives you as a contract that you need to abide by whenever anything happens. So today, I'm gonna teach you how to sort of briefly go through this thing in front of the insured when you're signing the claim and you're checking to make sure coverage exists. What's up, advocates? Back again, Vince Perry, your public adjuster here in the state of Florida, trying to help any and all public adjusters out throughout the entire country as to just sort of get their business started, get their business going, and hopefully you could learn something and I can teach you something to help finagle your way through this insurance claim game, is what I call it. So today, without further ado, I'm going to sort of give you my process, my step-by-step process on how I go through this thing quite briefly, quite quickly. Just checking to make sure when you're signing that claim or when somebody calls you for a claim, you want to make sure that there's coverage. Because more often than not, insureds who don't call a public adjuster right off the bat, they're basically filing the claim on their own without knowing that they might not even have coverage, or there might be limits that they're not aware of, and then insurance company comes back and says, no, you're not covered, or no, we're not paying more than $10,000. That happens a lot. So it's just sort of, I guess, my process of going through it fairly quickly. So all right, without further ado, here's what we do. So the first thing I do is I obviously, when an insurance, when a homeowner calls me for a claim, and I schedule the appointment for me to go see them at the house or the building, I tell them to make sure that they have a copy of their insurance policy. A lot of times they have it somewhere stored inside the house, or it's usually by email now. So if they're not sure, that's sort of what I tell them. I said, why don't you just check your last email from your agent? I'm pretty sure they send it to you by email as well. That's how I get it. So, and then they could just print it out for you, or they could just leave it there. I've gone through plenty of PDFs at the homeowner's house looking through the policy stuff. So that's the first thing. The bare minimum that you want to make sure that they have is the deck page, which I'm going to get into now. The deck page is by far the most important page that you need to look at. Unfortunately now, as time goes by, the insurance companies are making it much harder and harder to actually have coverage. So you need to be a little bit more in depth on looking through the whole policy. I'll tell you how to sort of do that quickly, but the deck page is where it's at. A long time ago, all we really needed to know what kind of policy, if it was an open perils policy, we'd be good to go. Now they've got limits and they've got different rules and stipulations to try to hurt the homeowner, basically, that make it a little bit more difficult to make sure that the claim is going to be covered and it's going to be paid correctly. So, all right, without further ado, first things first is I'm going to go through the deck page. Okay, so I'm going to put the deck page right here so you can see sort of what I'm looking at. So at the top left corner, this is a Citizens policy. No big deal. Citizens is a very famous insurance carrier here in the state of Florida. First thing I do, the most important thing, so years ago, if you see at the top here, it says Homeowners HO3 Special Form Policy. Like I was just saying, back in the day, that's pretty much all we needed. If it was an HO3, we were good to go. I don't know if the numbers vary at all throughout the country, but you know, here in Florida, it's basically HO3 and you have an open perils policy, which means what? That means everything under the sun is covered unless it's listed in the exclusions. For those that don't know, you have the HO1, you have the HO2, and you have the HO3, or DP1, DP2, DP3. So your HO1 is your basic policy, and that's a named peril policy, and it's only gonna have a handful of things that are covered: fire, lightning, explosion, smoke, windstorm, hail, riot, civil commotion, aircraft, vehicles, vandalism, sprinkler leakage. It's got a decent amount of things that are covered, but it's not really where you want it to be. The HO2 or the DP2 is the broad form policy, which is gonna have all of those things, as well as some broken windows, structural glass, falling objects, and sometimes water damage, okay? Obviously, these are much cheaper than your HO3, which is an open perils policy, special form, and basically everything is covered, like I just said, unless it's listed in the exclusions, which also we'll get to. Okay, so under the HL3, you've got the policy number, you got the policy period. This are obviously very important things just to know, but also if you're going to put together a proof of loss, which I'll teach you in one of these videos, you're going to need to have this deck page to fill that thing out. So you got your policy number, you got your policy period from and to, and then you've got all the information of just sort of the insured, of the residents, and then of the agent, which is again also going to be very important to put on your proof of loss, on your POL. Okay, so here's where we get to sort of the good stuff. So me personally, guys, before I continue, when I go and I sign the claim, I like to take this out in front of the insured or have them give it to me and explain it as I'm explaining it to you. So basically what I'm doing is this is sort of how I run through it with the policyholder, because most of them don't know what the heck they're looking at anyway. So it's good to at least just give them, even if you're not going to sign the claim and they're not going to be cut or whatever it is, it's good just to sort of teach them about their limits, because none of them know. The agents obviously don't tell them. So, I mean, we need to explain it to them. So the first thing you have all other perils deductible, $2,500 deductible here. So basically anything that happens to the home that's not a windstorm or hurricane. Here in Florida, we've got the separate hurricane deductible. I know that in other places you've got you got a separate earthquake deductible, which is a separate thing. There's also a sinkhole sometimes has a separate deductible as well. In this case, you're going to have your normal deductible and a hurricane deductible. So you get your all other perils deductible, which is $2,500. And like in most other catastrophic events around the country, your hurricane here, for example, deductible is going to be a percentage of the total value of the coverage A, of the dwelling of your policy. So here it's 2% of the $248,100 in the dwelling. So that comes out to $49.62. It's good to know because a hurricane comes around for those of you that live in Florida, and if there's just, maybe it's a category 1 or it's just a tropical storm or something, this hurricane deductible will apply to tropical storms too, by the way. It's basically your wind deductible. If there's not much damage, and if you're not going for full roof replacement, then you might advise the client to not even file a claim. That's just my advice. So the hurricane deductible is obviously much higher. So we knocked out the deductibles right there. The next thing we have is the property coverages. So here's the way I like to explain it to everybody. You're more than welcome to use it if you'd like. So you've got your dwelling. Your dwelling, you have coverage up to $248,100. Your dwelling is what I say is you take your house, okay? This is your home. All right, you take it, you pour it upside down, and let's say a bunch of stuff falls out, like all the chairs and all the desks and the equipment and the sofas and all that, everything falls out. Everything that stays stuck to that house is your dwelling, which is your tile, which is your baseboards, your cabinets, the paint, everything else, everything that stays stuck onto that house, your kitchen cabinets, all that's part of your dwelling. Okay, so just for future reference, where I'll get to, that's part of your dwelling. Your other structures is anything that's on the premises, on your property, that's not attached to your home. Okay, it could be anything. It could be a shed. It could be a play set. It could be an outdoor swimming pool. That's like a separate swimming pool. All that stuff would be covered under your other structures. I just explained this the other day. He's like, I don't have any other structures. I said, if you were to get other structures, you would have coverage for it. Oh, look at this one. This one doesn't have any coverage for other structures. Your personal property, back to my example with your house, and you turn it upside down. Everything that falls out, that's covered under your personal property. So your desk, your chairs, your laptop computers. It could be jewelry and stuff like that too. But usually that's going to be like an extension of coverage, and that's called, I can't remember right now. I was just explaining this to somebody the other day. It's a separate coverage, a floating policy. That's like a separate coverage that you get additional. You'd have to pay a little bit extra, and you'd get those things covered much better. So everything that falls out is your personal property. Everything that stays stuck, that's your dwelling. And then the loss of use, of course, is if you need to move out as a result of the loss or as a result of major repairs that are going on in your house due to the loss that occurred. Obviously, loss of use will pay you for to rent another house, to stay at a hotel. It's going to cover all of your expenses, like going out to dinner and buying food. Also, even just like the stuff inside of your refrigerator that maybe goes bad. That was a very common thing after Hurricane Irma, was people had no power for about 5 or 6 days. Well, any kind of food spoilage that would go under your loss of use coverage. So. And then you've got, not really important to us, but you've got your personal liability and your medical payments, which basically, those are liability coverage. That basically falls into if somebody were to get injured in your house, whether it be a guest or a worker or something like that. If anybody were to get injured in your house, that'd be covered under here. And then your other coverages, like your ordinance of law, ordinance or law limits, you've got 20, you have up to 25% of coverage A. What is ordinance of law? It's going to be permits that you're going to have to pull out. So if it's like an exterior wall that went, a car runs into the house, exterior wall goes, or has the effect of windows as well, you're going to have to pull permits in order to put that back up. Well, the amount of those permits that would go under your ordinance of law, 25% of coverage A. So you've got a pretty decent amount there. So here, if it were 25%, it'd be 25% of 248,000, which would be about $50,000. So that's that. That's the most important thing to know. As I keep looking at this, okay, that's pretty much it. In this policy, for instance, okay, I'm gonna go over one more deck page. Okay. So, okay, here's this deck page. This one's going to be, it's got a little bit more stuff. Okay, so now let's see this deck page. This is Tower Hill, another insurance carrier here in the state of Florida. Okay, so if you look at the top, I just wanted to show you two different ones, just so you sort of see how it reads differently. Okay, so you got your homeowners here. You got the same thing at the top, basically. You got the policy number on the right this time instead. You've got the dates on the right as well. And you got the insured, you got the agency, same thing. You got your policy period right there. And then you've got the same right here in the middle. You've got your dwelling. Your other structures, this time there's $5,500 of other structures. You got your personal property, you got your loss of use, liability, medical. Make sure you explain this stuff to these people so they have an idea of what their limits are. Because I've walked into condos. You walk into a condo and you're representing the person inside of the home or of the condo unit, and they only got $10,000 limit or a $50,000 limit. Obviously, it's a much smaller home, but they need to be made aware that they ain't getting more than $50,000. Okay, so breakdown of the premium. If you see here all the charges, so here's where it can get a little bit tricky, which we've been running into different things like $10,000 water damage limits, contractor right to repair, where they send their own contractors out, which has been a complete disaster for the insurance company, in my opinion. Hopefully that doesn't last. And that's sort of where you're going to find some of that stuff right here. You're going to find it here in the breakdown of the premium and the charges and stuff. So just beware. Definitely read through that. Right here, it's nothing. You got catastrophic ground cover collapse coverage. You got the limited fungi, which is mold coverage, okay, which is a very common thing in Florida. So you've got here limited. That's usually $10,000 for the most part. So you got a $10,000 limit there. And I think, correct me if I'm wrong, you guys could comment. I believe the aggregate sublimit is you get up to $50,000 for the year that you can get covered for mold. So you got the personal injury. You got, look and see how this is a special one. If you look here, screened enclosure special limitation. So, you know, that's something that if the screen enclosure, if it's a hurricane claim, this is something to look at because it's only a maximum of $10,000. Some of these screen enclosures, they go for a lot more than that. But because so many people, at least in Florida, were claiming these things, I guess they just got tired of paying them, so they put a limit on it. Here in this charge, this breakdown of premium is where you're going to find a lot of that sneaky stuff that you need to be careful of. Like I said, the water damage limit and the contractor right to repair. These are just some credits that they have there. Okay, so let me keep going on. Okay, I'm gonna stay with this is the second page here. I'm gonna stay with the Tower Hill claim. We've got it's pretty much the same. We've got the form HO3. Remember, that's what you want. If it's not an HO3, you're gonna have to really look at the policy to make sure that there's coverages. Okay, not really much there. Here's another breakdown of your coverage A, coverage B, coverage C. And then your deductibles too. So this is your checklist of coverage. This is pretty important too though. So if you go to the checklist of coverage, this is another page that I go to. In case I miss anything on the first deck page, I always go to the checklist just to make sure that everything's sort of going to be okay. So, so here we've got the Y means yes, N means no. So if everything is good for Y, then we're good. Then just take a quick look at the N's. The N, we've got flood. That's a separate coverage anyway, so no big deal. And then N, we've got sinkhole. That's a separate coverage as well. So we're good. Everything is sort of sort of covered. So far so good. And you get your loss of use, all the additional living expenses, that's covered. And then we've got additional other coverage. Again, this is where some of the water damage limits and other stuff is going to come into place. And we've got Ys all the way through, so we're good here. There's that mold fungi at the bottom. Everything is good. Also here is where you see what was it? Debris removal is the first one. Again, another common thing during hurricane claims. Debris removal. Everybody goes crazy. The clients go crazy because they're just like, well, I'm spending, I don't know how many hundreds of thousands, not hundreds of thousands. It's costing me $8,000 or $10,000 to remove all the trees in my house, which sometimes it does. It costs a lot of money. Well, you need to explain to them that's great, but the debris removal only covers 5% of your coverage limit. And 5% of your coverage limit in this case was a $276,000 deductible, so 246,810. That's going to cover you about $11,000, which actually that's really good here. That's pretty good. A lot of times it's only $500. So just looking at this now, that's actually not too bad. A lot of times, like I said, it's $500. Okay, we go to the next page, and nothing really here that I would tell you that needs to be looked at. Yeah, all is good. So that's pretty much it with the Tower Hill one. I'll go back to the Citizens one real quick, and here's what came up with this one. And that's the reason why I wanted to go here. Is if you see here, this was all the way in the front. Again, usually things like this, they're going to be sort of towards the front, which is good, so you could catch them. So here's our new thing that we've got going on in Citizens that I'll do probably its own video on. It's a manager repair contractor network. It's crazy. Basically, this means that they're going to send their own people out to do the work. However, you have the option of not going that route. But if you choose not to use their vendor, then you have a limit of $10,000 on the claim. There's going to be a lot of people from outside of Florida that are going to be like, what? But yeah, that's the way it is. So this is the kind of thing that you really need to be aware of and be careful with, because it's there, it's out there. Okay, so then the last thing I'm going to tell you is when all is sort of said and done, and you've sort of looked through those first few pages and you've gone through it all and you think everything's going to be fine, at least for us now, I think it's important that we just sort of flip to the back. So you want to, because that's where all the exclusions are. So in case you missed anything, so I usually just honestly, you don't really need to read a lot about this junk. I would say maybe the appraisal provision you'd want to read. I didn't think I was going to talk about this, but yeah, sometimes the appraisal provision, it could just be worded differently. Oh, here it is. I found it real quick. So on page 11 of 17, it's got the mediation or appraisal. And you want to see sort of, if you and we fail to agree on a settlement regarding the loss, you must notify us with your... See, this is a great policy. I mean, this is like an old school policy. A lot of policies don't read like this. Yeah, so for instance, we must notify them that we want to go to appraisal. That's fantastic. A lot of insurance policies now, both sides have to agree. So what ends up happening is the insurance company say, no, we reject your appraisal, we're going to mediation. So, but that's fine. You take it from there. You got to still try. So that's also something that you could look at just to be aware. And you could tell not in this case, but in another claim that I had, I came in for the appraisal. So the first thing I did was go to the appraisal, and I found out that both sides had to agree. So, quick tip, if it's both sides that have to agree, what I did is instead of immediately sending out my dispute for appraisal, I said, hey, we're trying to get a supplemental payment. Here's my estimate. Let's try to negotiate. And it worked out beautifully. We never even went to appraisal. Okay, so then I was going to say you scroll to the back, and then in the back is where you're going to get sort of all of your exclusions written down separately. And yeah, here they're just like big pages. I'll show you now. Yeah, see, like this is an endorsement here. Endorsement and exclusions. It just sort of looks like that. Okay. See, like it's very obvious. It's like a whole page. It's just limited fungi, wet. You know, that's like boom, and then a whole endorsement about your ordinance of law that I was talking about. You want to just scroll through these because there may be something in there. For example, this used to be a very common claim in Florida. Oh, I had it. It was this one, the cosmetic and aesthetic damage to floors. So yeah, when I first started in this industry, there were a lot of claims for chip tiles, and that changed after about 2 years. And they said, okay, we're only putting a $10,000 limit on those chip tile claims, and now that's in the. And so for a while, we had to go into the policy and check to see if this cosmetic and aesthetic damage to floors limitation. Now, since that's already, it is what it is, we're going in for looking for water damage limits. So after you finish through the first few pages, you take a look at all the coverages to see what's covered, and if there's anything sneaky in there, you can just go to the back and just to confirm, and then you should be good to go. I would advise, which is going to be another video about having a good team around you, but if you have an attorney that you can go to, it's good to just sort of be able to call that person just in case you're unsure about something in the policy. But that's pretty much it. That's my process for going through it. The deck page is the most important page, and you want to make sure you keep a copy of the deck page so that you could put your proof of loss together when the time comes to put it together. Deck page, the checklist of coverages, very important, and then go to the back to see if there's any extra endorsements or exclusions to be looking at. So the deck page, it's got all the other coverages and stuff too. That's very important. And the checklist is very important. And then, like I said, you can look at the appraisal provision, which is usually around page 11 or so, to see if you have to agree to appraisal or if you could just demand it. And then if there's any other exclusions or endorsements. Like I said, back in the day, the only thing that we had to look out for was the HO3. That was it. HO3 policy, we're good to go. But now there's a lot of stuff that they're throwing in there. So make sure that you look through it as much as you can before pulling the trigger on that claim. Because I would be lying if I told you that it hasn't happened to me, where I filed a claim, a week later I have the inspection with the adjuster, and the adjuster says, hey, there's a $10,000 limit on water damage here, right? And I'm like, what? So it might happen to you, but don't worry, it's not your fault. At the end of the day, you're not the one purchasing the policy, right? It's the homeowner, it's the building owner, it's the agent who's selling this policy. Yes, it is your job to come up and find that out, and you can let the the policyholder know, but it's not your fault that they're buying these really bad policies. So, but look out for it, because it may steer the homeowner away, the policyholder away from actually filing the claim, because what's the point if they're only going to get $10,000 and it's a huge loss. So just something to be aware of. It's good to teach the homeowner and the policyholder. It's good to teach them sort of about their policy, so at the very least they get a nice little lesson. It makes you look good. It makes you look like you're knowledgeable in this industry, and you're sort of giving them a partial little service, whether you sign the claim or not, about how their insurance company reads. If they ask for it, you could recommend. Sometimes I recommend having a lower deductible. $2,500, like on this case, is not bad, but sometimes I run into $5,000 and $10,000 deductibles, and I'm like, you should move that down. I run into high hurricane deductibles, and I say, you should move that down. So there might be some stuff that you could recommend, and again, it makes you look very knowledgeable, and they'll think about you the next time something with insurance comes up. So that's it. That's my process on doing it. Hope you learned something. If you have any comments or questions below, please leave it. If there's any corrections that I made a mistake on, please let me know. Always trying to get better on a daily basis. And that's that. All right. You guys have an excellent day, and go sign them up. Sign up in claims. Bye.